Batlivala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamalai Jairaj from Batlivala and Karani Securities India Private Limited. Thank you, and over to you, sir.
Thank you. Welcome to TVS Motor Company Q1 FY25 conference call. From TVS Motor Company Management, we have with us today Mr. K. N. Radhakrishnan, Director and Chief Executive Officer, and Mr. K. Gopal Desigan, Chief Financial Officer. I will now hand over the call to Mr. K. N. for the opening remarks, to be followed by question and answer session. Over to you, sir.
Good evening, everyone, and thanks for joining us today. Q1 of 2024, the company continued its growth trajectory, posted its highest revenue, EBITDA and profits. This was possible through continued improvement in sales, better product mix, and sustained cost reduction initiatives. When we look at Q1 quarter, the company's operating revenue grew by 16%, 8,376 crores, as against last year's corresponding quarter, 7,218 crores. Two-wheeler domestic ICE sales grew by 14% compared to Q1 of last year. We grew ahead of the industry in retail. Two-wheeler international market company sales grew by 16% over the last year. On ICE, total two-wheeler ICE sales grew by 14% compared to last year Q1. EV two-wheeler sales is at 52,000 units as against last year Q1 of 39,000. Total sales three-wheeler is at 31,000, slightly lower than first quarter of last year. On profits during this quarter, the company registered highest ever operating EBITDA of rupees 960 crores with a growth of 26% as against EBITDA of 764 crores during Q1 of last year. Kindly note that we have not recognized PLI incentive in this quarter. The company's operating EBITDA margin improved by 90 bps at 11.5% as against 10.6% during last year first quarter. And as you know, Q4 last year financial year 24 was 11.3%. Company posted its highest ever profit before tax of 783 crores, recording a growth of 28% during this quarter as against 610 crores in the first quarter of last year. PBT for this quarter includes 28 crores towards fair valuation of the investment held by the company. Profit after tax grew by 23%, 577 crores as against 468 crores during the first quarter of last year. Q4, the PAT was 486 crores. On TVS Credit continued to do very well. Now we have more than 1.5 crores customer base. Book size crossed already 26,000 crores. Now the book size is 26,351 crores. Book grew by 20% over last year Q1. TVS Credit PBT for the quarter grew by 19%, 187 crores as against 157 crores during Q1 of last year. TVS Credit Services, by leveraging cutting-edge technology and analytics, offers products in expanded portfolio, financing for used car, consumer durables, new and used cars, used commercial vehicles, mid-corporate loans, gold loan, apart from two-wheeler and three-wheeler financing. Regarding Norton, we are planning to launch already 6 new products over the next 3 years. The first of these models will be available end of next year, and it will also go on sale in India soon after the international launch. The new range of motorcycles will be more affordable than the current lineup while still retaining the premium positioning that TVS is keen for Norton to command. As you know, Norton is super premium, and this brand has got great value. On EV, TVS iQube established as a very strong brand in the EV segment in its technology-led features, best-in-class quality. During this quarter, company introduced new variants to the iQube portfolio for making electric mobility accessible to everyone. TVS iQube is now available in 3 battery options to choose from: 2.2 kilowatts, 3.4 kilowatts, and 5.1 kilowatts. TVS iQube now offers an array of 5 variants available in vibrant 11 colors, making this one of the largest and most attractive EV portfolios in the market. The feedback from the market and the customers are very positive. As you know, we have a well-planned product lineup for electric mobility, and you will be witnessing some of the launches soon. Last year, we started TVS iQube pursue ASEAN and Asia markets. We'll expand EV product sales to both developing and developed markets. We strongly believe that India will emerge as a major export hub for two-wheeler EV. The continuous improvement in the EV supply chain and infrastructure, we are confident that we will continue to be a strong player in the EV segment. On outlook for Q2, I think the recent budget laid by the government India focuses on employment generation, continued higher commitment to infrastructure and rural economy. This will add to the present momentum. We are expecting rural to recover. With expected normal monsoon, we could witness robust growth in Q2. For the first time, we are seeing rural doing slightly better than the urban. The improving road infrastructure and economic environment will drive the demand for two-wheeler mobility. And two-wheeler has got a huge opportunity in the medium and the long term, given the challenges in mobility as well as also investment from the government on the infrastructure and road development. During this first quarter, the ICE Vahan industry grew by 13% over the first quarter of last year. I think this is an excellent comeback on the Vahan growth. On international business, there were some challenges in Red Sea that is affecting the transit times, and increased also timely availability of vessels containers is a concern. We had some challenges in our dispatches in Q1. We have taken enough countermeasures to mitigate these challenges, and situation is likely to improve in Q2. During this quarter, we added HLX 125 5-gear to our portfolio. The new motorcycle offers features that are powerful yet efficient. It has best-in-class durability, requires minimal maintenance, has a superior engine, provides excellent mileage and performs across the terrain. This will definitely further strengthen our international product portfolio. Certain select African markets are facing challenges due to currency devaluation and persistent inflation. However, considering the base effect in our assessment, the possibility of further decline in Africa is low. We feel that we will be doing better in Africa this year. LATAM gives us a huge opportunity. We have started exporting to LATAM. Asia, we are seeing some challenges in Bangladesh, but we are hopeful that things will settle down soon. Middle East also a huge opportunity for TVS, and we are strengthening this area. Our upcoming launches, I want to highlight that there will be one product in ICE and one product in EV, which will be coming soon in this quarter. And that will further strengthen our excellent range of product portfolio. Our strong product portfolio, our unwavering focus on the consumer quality, new products and attractive quality and technology with features. We are confident that we will outperform the industry both in domestic and international markets. Extremely happy that EBITDA has already crossed 11.5. We will continue to leverage scale benefits, better product mix, and sustained effort on cost reduction. This will enable us to further improve our EBITDA going forward. And we are very confident that all the product brands, portfolio of brands starting from Apache, Jupiter 125, iQube, Raider, Ntorq, the Star range, HLX, Radeon, TVS King, TVS Ronin. We are very confident that we will do better than the industry in both domestic and international across ICE and EV segments. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chandramouli Muthiah from Goldman Sachs. Please go ahead.
Hi, good evening, and thank you for taking my questions. My first question is just on the other expenses line this quarter. Seems to be about 11.4% of the total top line. The last time we had other expenses this high in ratio versus top line was around the June 2020 quarter during COVID. So just want to understand, is there any one-off in the other expenses line item this quarter? Because we've seen 3% QOQ revenue growth, but other expenses has grown much higher.
See, other expenses, you are comparing Q1 of last year to this year Q1?
I'm just saying the 11.4% other expenses ratio versus top line is not with this high.
There are three important things. One is one variable nature, packing, freight, everything has gone up. It's about 60 crores. Okay, this primarily because of the increase in turnover. And also the investment in brand building activities, which has resulted in increasing marketing expenses almost 87 crores. Okay, and as I have highlighted earlier, we are investing in digital technologies and innovation. That is another 35 crores. So effectively it is between variable expenses of almost 60 crores and brand building and marketing about 87 crores and digital and another innovation activities about 35 crores.
Got it. That's helpful. Second question is related to the PLI incentives. So just want to understand, I think some of your peers, most of your peers in the two-wheeler industry are already booking the PLI incentives and you are also eligible. So I just want to understand what the thinking is behind holding back from booking the PLI incentives in our accounts and how to think about as and when we book, will it sort of be lumpy for the whole year, particular quarter next year?
One is as informed by KNR, we have not recognized the PLI in the reported numbers. Our products are eligible and are certified and we meet all the requirements of DVA. Only reason